Do you ever wonder which asset class to invest in? Should you buy stocks or better precious metals? Should you invest in gold or in real estate? In this video I want to introduce you to ratio charts. Ratio charts are a powerful tool to compare different asset classes with each other. Ratio charts can show you if one asset class is cheap or expensive measured in another asset class. They can be especially useful in times with high inflation because the pricing in dollar or euro can sometimes be misleading. But before we begin, please note that this video is for educational purposes only. This video is not financial advice and I am not your financial advisor. Always be responsible for your own financial decisions. To better understand ratio charts, let me tell you a little story. Let me introduce you to Bob. Bob works for a big company as a software engineer and makes a good amount of money. The money on his bank account is growing from month to month because Bob has a very simple lifestyle. He don't travel much and he spent most of his free time with video games and Netflix. One day he read an article in the newspaper about inflation. This article make him concerned, if his wealth is really protected when the money on his bank account continuously loses value. So he decided to put some of his money into precious metal. But now he thinks, should I buy silver or gold? Because Bob is unsecure about this question, so he decided to ask his good friend Alice for her opinion. Alice is a very passionate precious metals investor and has a lot of knowledge about this topic. She advised Bob to have a look at the gold-silver ratio. So what is the gold-silver ratio? The gold-silver ratio determines how many ounces of silver you need to buy 1 ounce of gold. At this moment in February 2022, the ratio is around 80. So you need 80 ounces of silver to buy 1 ounce of gold. Taken into historical context, this is expensive because the average price for 1 ounce of gold is 60 ounces silver. Imagine silver as a currency like euro or dollar and you have to pay 80 euro for 1 ounce of gold, whereas you have to pay 60 euro on average. As long the ratio stays about 60, it could be favorable to buy silver because you could wait until the ratio returns to the average or below and switch the silver to gold. With this strategy you can have more gold in the future than if you put all your money in gold now. Of course you need to consider taxes when buying or selling the precious metals. Here in Germany where I live we have a tax of 7% on silver coins and you need to hold your precious metals at least 1 year to sell them tax-free. Let's now have a look at the long-time chart of the gold and silver ratio. Since the mid-80s the ratio stays most of the time between 45 and 80 but sometimes overshoots to the downside like in 2011 during the last precious metals bull market. Or overshoots to the upside like during the sea crash in 2020. Now I want you to ask the question, could it be more favorable to buy gold or silver at the moment? If you like you can pause the video for some time and think about it before I tell you what could be the answer to the question. Like you can see on the chart is that the gold-silver ratio is with almost 80 on the upper end of the channel. One could argue that it's now favorable to buy silver instead of gold because you get 80 ounces of silver for the same price you would pay for 1 ounce of gold. What is a better deal like you get most of the time? In average you only get 60 ounces of silver for 1 ounce of gold. Me personally prefer to buy more silver than gold as long the ratio stays about 70. Let's come back to Bob. So after Alice introduced him to ratio charts he found out that silver looks cheap in comparison to gold. With this knowledge he decided to invest 70% of his money into silver and 30% into gold. He overweight silver because of the favorable ratio but also put some money into gold because it's less volatile. With this example you can see how you can use ratio charts to your advantage to make better financial decisions. Especially in times like today where tons of money is flowing into the markets and forming gigantic asset bubbles, it is difficult to recognize the intrinsic value of assets. That's why I love ratio charts, because they give me a way to find undervalued investments based on ratios. There is not only the gold-silver ratio. You can form ratios between all conceivable objects and thus get a feeling for whether something is expensive or cheap. Other examples of ratios are the S&P 500 to gold ratio, that prices the S&P 500 in ounces of gold. Or the oil-to-gold ratio that prices oil in ounces of gold. To get a better understanding of ratio charts, let's go back to the first example, the gold-silver ratio. What happens to the ratio when both the gold and silver prices fall, with the silver price falling even faster than the gold price? The ratio increases because the number below the fraction line shrinks faster than the number above the fraction line. We had this situation in the sea crash, where 1 ounce of gold suddenly cost 110 ounces of silver. In precious metals bull markets, it is the other way around. The price of silver rises faster than the price of gold, resulting in a falling ratio. For example, at the end of the last precious metals bull market in 2011, the ratio fell below 30. So what can you learn from this? Ratio charts are a good tool to identify undervaluations or overvaluations of asset classes, and they can show you when it might be a good time to switch from one asset class to another. If you already use ratio charts, let me know in the comments what your favorite ratio is. If you like this kind of content, don't forget to give the video a thumbs up and subscribe to the channel.